Good morning, afternoon, evening, everybody. Welcome to Deep Dive into History of Forex Markets, courtesy of Edge Forex, where we believe in keeping our edges sharp. Now, imagine a time before convenience of digital trading, back when exchanging currencies was as straightforward as your morning coffee order is today. Yes, there was such a time, and no, it wasn't just a couple of years before the internet took over. Our journey begins way before the internet, smartphones, or even the concept of fast food. We start in the era where trading involved more physical coins than clicks, and the gold standard was the name of the game, not premium subscription plans. But as the saying goes, change is the only constant. The forex market has evolved from the clinking of gold coins to clicking of mouse button, seeing the end of gold standard and the welcoming era of floating exchange rates. With Dutch Forex, we have navigated these changes, always staying a step ahead, much like avoiding that one squeaky floorboard every night. So buckle up as we take a swift journey through the remarkable evolution of the forex market. It's a history filled with innovation, adaptation, and yes, a few unexpected twists. Kind of like this presentation. Let's get started. Let's go way back to a time where if you wanted something, you had to swap something you had for it. That's the barter system for you. Simple, right? Well, not exactly. Ever tried exchanging a chicken for some apples? It gets complicated. So people started getting creative with what they use to trade. Instead of chickens and apples, they use stuff like salt or spices, called commodity money. Imagine buying a pair of shoes with a bag of salt. But then someone had a bright idea. Why not use something small, shiny, and valuable? Enter gold and silver, the first real money. Much easier to carry around, and everybody wanted it. But even gold and silver had their problem. Carrying a bunch of coins to buy a cow, not very practical, is it? So the ancient folks started minting coins, making a trade a whole lot easier. You knew exactly what your coins were worth. No guesswork needed, because they had a face value of, say, in today's world, you have a dollar, you have a euro. They had a face value, and you knew exactly how many coins or what denomination of your coins were needed to buy a certain amount of gold or certain amount of silver or a chicken or a piece of meat or something like that. So there's no more guesswork that was needed when the coins came out. So the trade kept growing, and with it came new challenges, like how to send your money long distances without getting robbed by bandits. What is the solution? A bill of exchange, kind of like an ancient version of writing checks. As trading got even bigger, some smart families started their first banks, offering to exchange different kinds of money. So they were the go-to folks for swapping your coins. So you could say swap your coins from Greece into coins that would work in Rome. And they would take silk from India and spices from India, and they would swap them for different coins. So that was a big game changer. It's kind of sort of like when you see these currency exchange places at the airports today. So then came like a really big change. Instead of money being worth something because it was made of gold and silver, it started representing something valuable. This was the start of the money as we know today. Money that is valuable because we all agree that it is. So from swapping chickens to using coins to the money in our pockets is all about finding better way to trade. It's pretty cool when you think about it, really, isn't it? So we've come a long way from those early days, and who knows what's going to be next. Okay, so after everyone got on board with using coins and then paper money, the world decided it needed a bit of an upgrade. That's where the gold standard comes in. Starting around 1870s, it's like the world agreed on the rules of a game where gold was the star player. With gold standard, every piece of paper money was like promised note that said you can exchange this for a certain amount of gold. It made sure that the currencies had the something real and shiny backing them up, which was pretty reassuring. This was great for a bunch of reasons. First off, it kept exchange rates between countries stable. If you knew how much gold your money was worth, then you knew how much foreign stuff you could buy with it. The stability was like green light for countries to trade more with each other, helping global trade really take off. But there was a catch. Since money was tied to gold, there was only so much money you could make. If you didn't have the gold, you couldn't just print more money. This kept things stable, but also pretty rigid. Then the World War I hit, and the countries needed to fund their war efforts. They pressed pause on the gold standard to print more money because, let's face it, wars are expensive and gold wasn't going to pay for it all. After the war, the world tried to get back on the gold standard bandwagon, but things got a bit shaky. The world had changed a lot, and sticking to gold was tougher with the economy trying to recover and everything else going on. So, the gold standard had its moment, making things stable and boosting trade, but it showed its limits. When the going got tough, sticking strictly to gold wasn't as golden as everyone thought. So now moving on, imagine everyone at a huge table in 1944 trying to fix the world's money problems after a lot of chaos. That's the Bretton Woods Agreement for you. Countries decided to make their money fixed value, like sticking a price tag on them that doesn't change much. They chose US dollar as the star of the show, making it the only currency that you could exchange for gold. It's like saying, hey, our money's as good as gold. Literally. To keep everything running smoothly, they set up two big clubs, IMF, the International Monetary Fund, and the World Bank. These were like the referees of the world of money, making sure everybody played fair and aiming to keep the economy stable. This system worked pretty well for a while, helping countries trade with each other without worrying about the money's value changing overnight. But like all good things, it came to an end in 1971. The world decided that fixing money's value wasn't the best idea anymore. So this decided to switch to what's called floating rates. Now, money's values could go up and down like a seesaw based on how the countries were doing. So Bretton Woods was like a big experiment in teamwork for the world's current countries trying to make trade easier and keep money stable. It had its moment in the sun, but eventually the world moved on to a new way of doing things. So picture this, it's 1971 and the big Bretton Woods Agreement we just talked about is about to change big time. Countries decided it was time to let their currency do their own thing, kind of like teenagers wanting more freedom. This meant no more fixed prices on the currencies, they started floating, meaning their values could go up and down based on what people thought they were worth. This switch made money world a bit like a roller coaster, more ups and downs, making things exciting, but also a bit unpredictable. Welcome to the world of increased market volatility. But here's where it gets cool. With currencies dancing to their own tunes, people saw a chance to use the computers to make trading easier and faster. This was the rise of electronic trading, moving us from telephone calls and physical exchanges to clicking buttons on a screen. As the world got more connected, the financial markets did too. The globalization meant you could be in New York and easily trade yen for euros or pounds or for dollars, all before breakfast. Governments started cutting back on rules, making it easier for money to flow across the borders. This was deregulation and opening up markets, making a world a bit smaller for traders. And then something really exciting happened. Regular folks, not just the big banks or financial firms, started to get into the action. This was the emergence of retail forex trading, where anyone with a computer and some cash could try their hand at trading currencies. So from a shakeup in 1971 to now, trading currencies has gone from something only a few could do to a global playground, thanks to technology, open markets, and a bit of adventurous spirit. Alright, let's dive into the world of floating rates. A big shift that happened right after 1971. Imagine currencies like boats on the ocean. Before they were tied up to the dock, and now we decided to let them float freely. Sounds fun, right? But it also means that they can go up and down with the waves. So now how much money is worth is decided by everyone buying and selling it. Kind of like how popular toys become really expensive around Christmas. This freedom makes the value of money more like a roller coaster ride, which is what we call increased exchange rate volatility. But don't worry, there's a lifeguard on the duty, central banks. They jump in with the interventions if they think the currency is going too high or too low, like kind of keeping boats from floating away or sinking. With floating rates, forex market got a lot more interesting. They became the big playgrounds where countries' economic health is tested in real time. And speaking of health, just like how we use thermometers and blood tests to check our health, economic indicators like job reports or inflation rates help decide if a currency is feeling strong or a bit under the weather. This whole setup gives countries a bit more wiggle room to handle their business. If the economy needs a boost or a cool down, they can let their currency float to a more helpful level. So floating rates are all about freedom and flexibility, with a bit of help from the central bank to keep things from getting too wild. Jump into our time machine. We're heading to the 1990s, the dawn of electronic trading. Picture the forex market like an old school bazaar, bustling and nice and lively. Then bam, the internet happens. and it's like someone flipped a switch. Suddenly, you can trade currencies from your couch or in your pajamas if you want. With the web, the whole world gets into the action. It's no longer just the big financial hubs. Now, anybody, anywhere can trade any currency. This global participation boom makes the Forex market truly international. Enter online brokers. Think of them as your trusty sidekicks in the digital age, making trading accessible to the masses. You no longer need a hefty bank account or a direct line to Wall Street to get started. And then things get really sci-fi with the emergence of algorithmic trading. Computers start doing the heavy lifting, making trades based on complex formulas. Hello, Edge Forex. It's like having a robot trader that doesn't sleep, which is perfect because Forex market decides it doesn't want to close ever. Now it's a 24/7 global party. As more and more people and robots jump in, the variety of currency pairs explode. It's no longer just about big names like the dollar or the euro. Now you can trade currencies from all corners of the globe, adding spices into the mix. But with great power comes great responsibility. So the world starts knitting a regulatory framework to keep Forex market safe and fair. Think of it as the rules of the road, ensuring everyone plays nice and the things run smoothly. This evolution from the physical to the digital, from exclusive to inclusive, marks a new era in the Forex market. It's transformed from a place where only the elite play to a playground for everyone with a dream and an internet connection. Fast forward to today, and the Forex market is like the ocean, vast, deep, and always moving. Every single day, more than $6 trillion swim through this ocean, making it the biggest financial market on the planet. At the top of the food chain, the big fish, the US dollar, the euro, the Japanese yen, and the British pound. These currencies dominate the scene, but there is plenty of action with others too. Who's diving into these waters? Everyone from the central banks trying to keep their currency swimming straight, to big institutions making waves, and even retail traders, folk like you and me, dipping their toes in from the comfort of home. The world's Forex market pulls through major hubs like London, New York, and Tokyo. Despite being spread across the globe, they're all connected, creating a market that's awake 24 hours a day, 5 days a week. Sleep? The Forex market doesn't know her. But it's not just about money moving around. Big world events like elections, wars, economic shifts can send ripple across or even tsunamis through these markets. It's a global thermometer in a way, reflecting the health and the mood of the world. And let's talk tech. The advancements in the trading technologies, like giving a fish a jetpack. Suddenly, executing trades is faster, smarter, and more efficient than ever before. Algorithms, automated trading, real-time data. This isn't your grandpa's Forex market. So here we are in a world where trading currencies is as accessible as streaming a movie. The global Forex markets of today are a testament on how far we have come, blending finance, technology, and global events into one non-stop, electrifying marketplace. And in conclusion, imagine the Forex market as a giant, bustling marketplace, but instead of fruits and veggies, it's all about trading money. And in this huge market where over 6 trillion changes hands every day, Edge Forex is like your go-to stall. They are here to help you trade currencies like the US dollar, the euro, the Japanese yen, and the British pound. The big names that everyone's after. Who's in the mix? It's not just the big towering banks or the pros with years of finance under their belts. With Edge Forex, regular folks like you and I can jump into the action as well, right from the computers at home. This market's heart beats in big cities across the globe. London, New York, Tokyo. Thanks to them being spread out, the Forex market doesn't really sleep. It's alive 24/5, ready whenever you are. But trading isn't about swapping currencies back and forth. Big news from everywhere and anywhere in the world can send ripples through the market. Edge Forex keep an eye on those, helping you navigate through calm and stormy weather alike. Technology is also kicking things up a notch, trading faster and smarter with the tools and the applications that make it easier to get into the action. Edge Forex is at the forefront of this, offering you the jetpack you need to dive in confidently. So there you have it. The Forex market today is a vast, vibrant, and welcoming to everyone thanks to platforms like Edge Forex. They are your ally whether you're just starting out or looking to dive deeper into the world of currency trading. That's it, guys. Thanks a lot for participating. I know there was a lot of information that's packed in. I would encourage you to go back and listen to it a couple of times. And if you have any questions or concerns, just shoot us the message and we'll be more than happy to address them. Thank you.